friends, welcome back. Here is our second case-based scenarios from ICAI booklet of CA Final Paper 3 Advanced Auditing and Professional Ethics. Okay, we'll go through the question, but before going through the question, just quickly go through the questions that were asked based on this case study. The first question is, to whom should have Mr. JJ informed about his resignation? What could be the possible consequence for his non-compliance? First of all, we need to identify who is Mr. JJ and why he resigned and what are the things that he need to undertake. So this was the first one which we need to concentrate on. And the second question is, with respect to the acts carried out by Mr. F, the partner of audit firm, what could you infer about the appointment of FDI and Co as auditors of PQR Limited? So we need to concentrate secondly on Mr. F, who is the partner of FDI and Co, who was appointed as auditor of PQR Limited. So these are the two things which we need to remember. And the third question is about the which among the below are permitted as per Chartered Accountants Act 1949. So before even going through this question also, we can answer this question. Before going through the case study also, we can answer this question. We'll go through option A. Sorry, there are 3 points which were given and we need to identify which were permitted as per the Chartered Accountants Act. The first So this is not allowed because charging fee based on a percentage of a profit of company is not allowed. However, in case of a trust, it is allowed. Okay, so this particular one, the first point, charging of fee as percentage of net profit is not allowed in case of a company. So this is not permitted. We'll go through the second one also. Select and recruit personnel conducting training programs for and on behalf of PQR Limited. Assume that PQR Limited is your client and you are the auditor and you are performing duties like selecting and recruiting personnel and conducting training to those personnel. And it means that you are acting as a recruiter for PQR Limited based upon the skills and the training that are required to PQR Limited. So this is permitted. This is not particularly prohibited by the Chartered Accountants Act. So this second one is okay, it is permitted. We'll go through option, the third one. Mr. I, one of the partners who is responsible to sign the financials of PQR Limited, was into teaching profession. Yes, that is fine because nowadays many CAs are also into teaching profession. So the second one and the third one are permitted as per Chartered Accountants Act. So option C is our answer, second and third. So this particular question is done without even going through the case study. And we'll go through the fourth one. With respect to the fees to be charged for its new assignment, which option can be adopted by FDI and Co? First, we need to look at what is the new assignment that is opted by among the below transactions which were undertaken by PQR Limited, which needs to be reported by the auditors under fiscal laws. So you are not being asked with respect to the tax audit view. So don't just go by the word fiscal loss. Without even going through the case study, you can answer, but still we'll answer this question only after going through the case study. Okay, what are the points that we need to identify? What is the new assignment of FDI and Co? And then the second one is Mr. F, who is a partner of audit firm, and FDI being appointed as auditor of PQR Limited. And then Mr. JJ. So these are the 3 points which we need to identify from the case study. So we'll go through the case study. Question 2. Okay, case study 2. PQR Limited is one of the leading companies in the cement manufacturing industry. Right from its incorporation, it has been a subsidiary of GDP Limited. The total shareholding of GDP Limited includes the following: The government of Puducherry and the government of Delhi each holds 19% of the paid up share capital. The government of Gujarat share is 13.5%. On 27th of August 2020, Mr. JJ, the auditor of PQR Limited, has resigned from his post. This is what we need to identify. Who is Mr. JJ? Mr. JJ is the auditor of a government company, because here see the shareholding itself is 19 plus 19 plus 13.5. So you can clearly say that this is a government company. Government is holding some. Citing his personal reasons, he had forgotten to inform about his resignation to the concerned authorities. Who are the concerned authorities? Comptroller and Auditor General of India and the Registrar. These two are the corresponding authorities, concerned authorities, who Mr. JJ has to inform about his resignation. So he has forgotten the same. If you forgot any compliance as to the laws, then here in this case the penalty will be 45,000. The casual vacancy was created by the outgoing auditor, was filled up with the appointment of FDI and Co chartered accountants as statutory auditors of PQR Limited. However, few shareholders of the company raised certain objections, which was later settled without any problems. As a part of the terms and conditions of appointment as auditors, FDI and Co agreed to do the following. Charge fee at 5% of the paid up share capital plus 0.1% of net profit of the company. This is the wrong charge, which is not permitted by the Chartered Accountants Act. However, Mr. J has agreed to charge only 45,000. So the previous auditor had agreed to charge only 45,000. However, the new auditors FDI and Co agreed to charge as 5% of paid up share capital plus 0.1% of profits. Select and recruit personnel conducting training programs for and on behalf of PQR Limited. So this is permitted, whereas the first one, charging of fees, is not permitted under CA Act. The company was having an annual turnover of 510 crores and hence it was also liable to tax audit under Section 44AB of the Income Tax Act. During the current financial year 2000 year 1920 and had reported a closing stock of raw material amounting to 2 lakh only as on 31st of March 2021. So these were the 2 points which FDI and Co has to report under fiscal loss. The company has changed its accounting policy and the company has reported closing stock of raw material only to the extent of 2 lakhs. Also, the company has borrowed a sum of 10 crore equally from 2 public sector banks and 2 non-banking financial companies. It has also repaid few deposits amounting to 75 lakh to the deposit holders through electronic mode. Okay, it has taken few borrowings and it has repaid few deposits also. As far as FDI and Co chartered accountants are concerned, Mr. F, who is one of the partners of the firm, this was the second question that was asked on Mr. F. So we need to identify what he is doing. Note, Mr. F doesn't sign the financials of PQR Limited. Okay, that's fine. Had borrowed a sum of 3.89 lakh from GDP Limited. He had also purchased goods worth 1.09 lakhs. Total is getting to 4.98 lakhs. Yes, 3.89 plus 1.09, total is getting to 4.98 lakhs from the company, which was in the ordinary course of business at arm's length price. Both the sum borrowed and the cost of goods bought are not yet paid by Mr. F. Okay. By going through this point, you might have understood that Mr. F is indebted to the company to the extent of 4.98 lakhs, whereas the indebtedness limit is 5 lakhs. Up to 5 lakhs, it's okay. If it is beyond 5 lakhs, this particular form FDI and Co can be appointed as a statutory auditors. We'll go through further. Another partner of the firm, Mr. I, who is also responsible for signing the financial statements of PQR Limited, was also engaged in the teaching profession during this free time. Okay, even this point was fine because Chartered Accountant Act provides the same, permits the same. Upon hearing about the efficient services provided by FDI and Co. Chartered Accountants, they were approached by XYZ Cooperative Society to act as the statutory auditors for the upcoming financial years. So the new assignment which was asked the questions is this one. What was this? XYZ Cooperative Society. This was the new assignment of FDI and Co. The firm agreed to offer and had the following options in mind with respect to the fees to be charged from them. What was the fee that is charged? It will be charge a fee as percentage of net profits or charge fee of 101 rupees. So since this is a cooperative society, this kind of charging of fee is fine. But in case of company, that should not be the case. So based on the above facts, answer the following. Now we'll go through question number 1. To whom should have Mr. JJ informed about his resignation? Mr. JJ, the first auditor who has resigned from the company. We understood that he had forgotten to report to the concerned authorities. Who are the concerned authorities? Registrar and the Comptroller and Auditor General of India. And because of this, he is punishable with a fine of 45,000 rupees. We'll identify where the same is there, in which option this point informed to the Registrar and Comptroller and Auditor General of India. So option A is wrong. And then option B, he should have informed to the Registrar alone. No. Who will inform to Comptroller and Auditor of General of India? So even this option is wrong. And option C, he should have informed to Registrar and FDI and Co. From where this FDI and Co came into picture? You need to inform only the Registrar and the C and AG. So even option C is wrong. We'll go through option D. He should have informed to the Registrar and the Comptroller and Auditor General. As a consequence of his failure, he is liable to a fine of 45,000 rupees. So option D is the correct answer. And the second question, with respect to the acts carried out by Mr. F, the partner of audit firm, what could you infer about the appointment of FDI and Co? What Mr. F did, he is indebted to the company to the extent of 4.98 lakhs. We have already discussed this point while going through the case study. So this was fine. 4.598 lakhs is fine because the total limit, maximum limit will be 5 lakhs. So the appointment of FDI and Co as statutory auditors is valid. We'll go through the options. Option A, it is valid since the indebtedness is within the prescribed limit. Here ends the matter. Option A is the correct answer. Still, we'll go through other options also. Option B, it is not valid since the indebtedness exceeds prescribed limit of 1 lakhs. So the prescribed limit is 5 lakhs. So option B is wrong. Option C, it is valid since Mr. F is not signing the financial statements. That doesn't matter whether Mr. F signs or doesn't sign the financial statements. And if his indebtedness exceeds 5 lakhs, then the entire firm will be disqualified to act. PQR Limited. See, indebtedness means it is either to the company or its subsidiaries or its holding companies or its sister concerns, whatever it might be, it falls under the same category. So since because you are not indebted to the PQR Limited, that doesn't mean the indebtedness relating to GDP Limited will go away. So option A is the correct answer. Question number 3 we have already discussed. Question number 4. With respect to the fees to be charged for its new assignment, what was this new assignment? It is XYZ Cooperative Society. What it decided? To charge fees as percentage of profits or 101 rupees. This is fine. We already discussed about this. So which option can be adopted by FDI and Co? Either 1 or 2. So option C is the correct answer. Question number 5. Among the below transactions which were undertaken by PQR Limited, which needs to be reported by the auditors under fiscal loss? Say this 10 crores and the repayment of deposits is relating to GDP Limited, but not of PQR Limited. And hence, option 2, this point number 2, change in the method of accounting during the financial year and reporting of closing stock of raw material, both 2 and 4 are to be reported under the fiscal loss. So, option will be B, 2 and 4. Option B, 2 and 4. Hope you are clear. We have completed the second case study also. If you have any doubts, please comment below. We'll explain that in detail. That's all for today. We have completed 2 case studies by now. If you have any doubts, please comment below. You will meet again in the next case study. That's all for today. Bye bye. Take care.